even though I have a background in math, I graduated college as an electrical engineer. I spent 30 years as a math teacher. When I came on the board, one of the toughest things for me to do was to learn and understand the financial report. I don't know how the rest of you as board members have dealt with learning and understanding financial reports. But we have someone who knows financial reports pretty well and is pretty good at explaining it. Steve Beer, who is our pro bono accountant, auditor, everything else, and a regular featured speaker at CCC, is going to help us better understand our financial reports.
Thank you. Thank you, Ed. Thank you, everybody. We decided to take a look at what the final product is in the financial statement, in the hopes that maybe you could work with your cooperators as far as what they're looking at as well, that it's not so much a surprise to them. So I've given you a bogus financial statement. No, we used Cooperative X for 10, and we're going to go through the components, working with the numbers, and any key metrics that we have in working with the information. So a lot of people are scared off by a financial statement, maybe the format, maybe the fact that there are numbers. We try to make our type bigger. We try to make our notes descriptive. Our communications to the board, we try to make it as easy to understand with the other person. But we're sort of in a conflict that we're working with the main body of accountants as far as recommended verbiage that they want and what it's easy to get to people to understand. So we have a little bit of a quandary when we work. So, but I did want to go through these with you and give you some idea. So I'd suggest that we break the staple on the financial statement so that when we're looking at something, you can look at the actual page that I'm talking about. It's up to you if you choose to do it. I know I find that easier to do. So when we look at it, we're going to have the main sections, which are the report that comes from the accountant, the balance sheet of what we have and what we owe, the statement of operations or the income statement. Cash flows, a lot of times people have trouble following why that's in the financial statement. And then the item that is generally one of the more important items, the notes, as far as what are the things that we needed to tell you that really weren't in the numbers. So when we go through the financial, I am working on the report letter now. We follow in an audit what's considered generally accepted accounting principles. So that's what's accumulated over the years of the accounting standards to follow. It's our job to make sure that the financial statements follow it. One of the key aspects to it is that you need to realize that for a financial statement to not have an exception, it needs to be on what's called the accrual basis. I'll get to that a little later, but I just wanted to make sure you realize that that was part of GAAP. When you look at this letter, it's got sections as to the different areas of responsibility. When we use the word management, that includes what the accounting industry calls those charged with governance. In your buildings, that's the board. So please don't read when it says here management that is simply the management that is running your property. This is the combination of the management that runs the property and the board. So that's an important aspect to take a look at. And almost all the financial statements, the required verbiage is that you and your management are responsible for the financial statements. We need to do that because we need to be outside as auditors to be independent. So even though we may assist in creating a financial statement and make sure it follows GAAP, we have to follow the regulations of keeping a step back, that we can be independent from the financial statement. Also, a responsibility is the design, implementation, and maintenance of internal control. And about a year ago up at Amalgamated, I did a presentation for CCC on taking a look at internal control internally to see if you can find the areas of concerns. Basically, internal control is there should be checks and balances, and on its own, your operations should detect any issues that would create a material situation or problem. So that's not just how much money we have, that's not just that we got all the money we should have from vendors, from cooperators. It's not that we potentially overpaid vendors. It's also that we maintained the property, that we did evaluations of employees, that we set a tone and said to people in the property that things like fraud, things like doing things behind the back or not up to par are not acceptable. That can be a big issue in the culture of a client, and in some properties that ends up coming down into the culture of management of it's okay a little bit here, a little bit there, because it's gone on so long. And that's one of the areas when we talk about internal control that I don't always hear about, is that we made sure to tell everybody this isn't going to be tolerated. It was sort of just like an understanding, hey, nobody should be stealing and nobody should be taking money under the table. But that doesn't mean that people shouldn't be reminded of it. So I always like to touch upon that one. And also management is responsible for the presentation of the financial statements free of material errors for fraud or error. Now I know you rely on us to make sure that that doesn't happen in the industry, because we're not IBM or GE that are big companies where that's going to be done on that level, and we're going to have the sophistication of employees to stop that. But still, I wanted to remind you, when you see these reports and you're going through the process of working with your auditors, that you realize that that responsibility is clearly in the letter, it's clearly in the documentation of the engagement letter and the representation letter at the end of the audit. As auditors, we're supposed to express our opinion that there's not a material difference, and there have been times where it's necessary to say there's a material difference when we've done our work. So it does happen, it's rare, nobody prefers it. Generally, we can get to the end of making adjustments to make the financials reasonable that the auditor can sign off. But I want everybody to realize that qualifications and also exceptions, disclaimers, do happen in doing the audits. And then the part that everybody is so mystified by is that we perform our procedures to come up with audit evidence, and I don't want to bore you with all of our procedures, but the history of accounting has come up with pretty good measures that find ways, that detect ways, and we tend to find the information that we need to when we're doing the audit so we can do the sign-off. The bottom section is our opinion. The last part on the top of this next page, which is just the one paragraph, talks about the main body of accountants requirement that you guys look at what it's going to cost to replace all the components of your building. Put information into the financial statement, how long it'll last, and what the plan is to replace it. And every year, the Council for New York Cooperatives, we talked about their show earlier, comes out and says not to follow those disclosures. So I'm sure most of you, if not all of you, have that similar paragraph in your financial statement that protects the board from the fact that it wasn't done. But it's an important aspect of knowing what you need to do, and also of internal control, that you've looked out 5 or 10 years at the projects that you need to do. You know, when I was listening to the presentation earlier about how long it's taken to deal potentially with that boiler issue, that's a concern for me if I was auditor, and this was a perfect example as to what damage could have been done because it wasn't taken care of. So internal control is a very big area, and a lot of times it doesn't get the benefit of what it should. So the long-term capital planning aspect is really important, to look into the future as to what you're going to need and how you potentially are going to fund it. Long-term funding vehicles such as, I heard flip tax earlier, but I prefer the term transfer fees. Transfer fees are a great source to put money away for when work needs to be done.